Hello everyone. I hope you're doing good mentally and physically fit and fine. So friends, audit is a voluminous subject. So we are continuing with our revision sessions. We have done a lot of things till now, uh, and I will be doing a lot of things more. We have already completed all the 19 chapters of CA final. We have completed 350 important questions. They are very good way to prepare, to revise. Apart from that, I wanted to give all concept revision from our book, where all the concepts I am simply going through that quickly, so that if you want to go through any of these concepts, you are comfortable. We have already covered a lot of chapters, so we'll be continuing. We are doing revision of 5 chapters. We are doing revision of 5 chapters, chapter number 13, 15, 16, 17 and 18. These 5 chapters. We are already through with one chapter, PSU. Let's try to do maximum things today. We are already through with one, that is group audit consolidated financial statements. We are going to start with PSU. We had one session on PSU, but that was not proper. There were technical problems. No proper streaming was happening and a lot of problems were there. Okay, so we are going to redo the PSU thing in this particular lecture. Just a minute, guys. We'll have to make some changes. Okay, let's see, guys. And this is the English session, and a similar session will be there 12 p.m. for English. So let's quickly do our PSU thing. So overview, the topic goes with overview of audit of public sector units. Public sector units is very simple and straightforward. So lot of the resources of the government are invested in PSUs, public sector units, and their audit is an important thing for our nation. And a lot of things get delegated to CA firms. So we should have knowledge about the terminologies and things which happen in PSU audit. Let's see, guys. So first, most important thing is legal framework. Now all the PSU audits are either done by CNAG or on the directions of CNAG. So CNAG is going to do that, and CNAG is having its own department, and that department is called IAD, Indian Audit and Accounts Department. So Constitution says that government audits will be done by CNAG or as per their directions, and there will be a complete department dedicated for CNAG, and that is IAD, Indian Audit and Accounts Department. Okay. So next is, now we talk about four articles which are given in Constitution: Article 149, 150, 150, 148, 148, 149, 150, 151. So Article 148, it tries to keep CNAG independent. It talks about four things, guys. First, it talks about appointment, and then it talks about RRR. It's in logical sequence. So first of all, the appointment will be done by President of India to keep CNAG independent. After appointment, RRR, remuneration will be similar to the remuneration of the Supreme Court judge. So CNAG should be properly compensated, and it will be non-votable. It will be non-votable. Non-votable means Parliament is not going to vote for it. Government cannot decide the remuneration. It will be decided by independent committee. So remuneration is not under the control of the government. Then after remuneration, retirement. After retirement, they cannot take any post of central government or state government. So that again they are not given any kind of benefit so as to buy their loyalty. So okay, so they cannot be bribed in the form of a government post. So they cannot accept any central government, state government post after retirement. R is for, again, removal. They can be removed only if there's a proven misbehavior. It should be proved, or incapacity, proven misbehavior or proven incapacity, plus a resolution should be passed by two-third majority, two-third, not a simple two-third majority in Lok Sabha and Rajya Sabha. Then only removal can happen. Then only removal can happen. So Article 148 keeps CNAG very independent. Then Article 149. Article 149 says that a separate law should be made for powers and duties of CNAG. And keeping that in mind, CNAG Act 1971 powers and duty was made. One of the very important thing was the tenure of the CNAG, which is specified. Tenure is 6 years. Is 6 years. Government runs for 5 years. Tenure is 6 years, or age of 65, whichever is earlier. Whichever is earlier. So we have Article 149, which for powers and duties. When you have Article 150, it says that whatever the format of basic books of whatever is the format of basic books of accounts by the central government or state government will be prescribed by President of India, and President of India will get advice from CNAG. So ultimately, CNAG only tells what should be the format of basic books of accounts. Then Article 151, it is CNAG's responsibility to do audit of central government and state government, make audit reports, and central government's report will go to President, state governments will go to Governor, and Union Territory report will go to Lieutenant Governor or Administrator, as the case may be. Some of them have Lieutenant Governor, some of them have Administrator, which will be ultimately placed in the Parliament Legislative Assembly. So very important articles of the Constitution. Now, PSUs, now government can do commercial activity in 3 different forms. The biggest form is either the ministry or department themselves, they do it, like railways is directly run by the ministry, railways, postal services, security, document printing services, and so on. They directly do it. Okay, their audits are generally done by the CNAG department themselves. Or smaller than that, if we say that it can be done, commercial activities can be done in the form of government corporations and government corporations are formed under a special act, and audit like LIC, UTI, and audits are done as per respective acts. Then finally, it can be in the form of government companies where 51% or more is held by the governments, and audit is done by chartered accountants, but which are appointed and directed by the CNAG. So this can be 3 different forms in which they can do the commercial activity. Now, our Parliament has 3 financial committees to assist government in their financial activities. We have 3 committees. 3 types of committees are there. Now, one of the committee helps ministries and departments in improving the way in which they do expenditure. So they help the ministries before expenditure is done, and that is estimates committee. Then we have committees which look into the expenditures and activities of the ministries and the department after the activities are done. That means after the expenditure are done. Okay. So we have 2 committees here to look into how ministries and departments are performing their work, to look into what CNAG is saying about the ministries and departments, what CNAG is saying about ministries and departments. We have PAC committee, Public Accounts Committee, and to look into the affairs of the government corporations and companies, to look into what CNAG is talking about them, what CNAG is reporting about them. We have COPU, Committee on Public Sector Undertaking. So the 3 committees are there. Now let's dive into each committee one by one. Let's talk about PAC committee, Public Accounts Committee. So this committee is formed specifically to study CAG reports and study CAG reports on government ministries and departments and how they are functioning. So what they do? So first three things are in a flow, they are in a sequence, and then we have one special point. Let's first see what three things are in a flow. So the first thing which this committee selects a particular ministry or department, the first thing they see is whether this ministry has done reappropriation. Every ministry is given a budget, a proper allocation where money should be spent, whether they have done reappropriation, whether they have changed allocation. To some extent, it is allowed. Whether they did it and was it effective. So first they go and check whether allocation was changed and whether it was effective. Then next, whether before doing the expenditure, proper process was followed, proper authorization was taken before expenditure is done. Then next, after the expenditure is done, is it properly accounted for in the records, books, and under proper heading, the expense is accounted for, which genuinely denotes its nature. Okay, so it's in a flow, guys. First, whether the allocation was changed, then whether proper authorization was taken, then after expenditure, proper accounting was done, and then one special thing. What is special thing? There are a lot of autonomous and semi-autonomous bodies which work under the ministries, and their financial statements are also reviewed by this particular committee, that is Public Accounts Committee. All the 2G scam, coal scam, etc., those reports were studied by PSE. Then we talk about COPU. COPU, that is Committee on Public Sector Undertaking. Now, this committee focuses specifically on the government, corporations, and government companies. So they look for three types of documents. Number one, they will first read and understand report given by CNAG on government, corporations, and companies. Then the next most important is auditors report on the PSUs. Then the next most important is financial statements and annual report prepared by the management of the PSU. They are going to study these documents, and they are going to focus on two things. Number one, how is the performance of the PSU? How we can improve the output? How we can make the output better? How can we improve the performance? And next, they're going to focus on how we can improve the efficiency, how we can improve the utilization of the resources, what more can have from the same land, from the team, from the employees, from the factories. They're going to focus on two things. And then there's one special. They will be doing any work which is given to them. They'll be doing any work which is given to them by speaker. Now, let's see Estimates Committee. The major work of Estimates Committee is to be an advisor to ministries. Either ministries can come to the Estimates Committee for their advice, or they can suo moto select the ministries, their expenditure, evaluate them, and give them suggestion. So what they see, first they see is allocation. They pick up any ministry and their expenditure and see whether the allocation of the expenditure is in line with the government policies which central government has established. For example, if renewable energy should be given importance, then majority of expenditure should go for it. After allocation, they see the format in which it is presented. The classification of expenditure, grouping of expenditure should be such that it is giving us key information, the key things in which government is expending money. Format should give a lot of important information. It should summarize a lot of important. So they focus on the format also. Then they focus on how we can make expenditure more economical and efficient with the present policy. So policy can be, for example, policy can be to punish people who are doing pollution, okay, to punish them, and incentivize people, give them money, those who are reducing pollution. Then they also give alternative set of policies, like instead of punishing people and giving incentive, can we simply subsidize and help them buy pollution control equipment, whether that will be effective. See, everything is in flow, guys. First, whether allocation was proper, then format was proper, how to make things better with existing policies, alternative set of policies. Now, CNAG does 5 different types of audit. Yes, 5 different types of audit. These audits may be done independently or these audits can be combined. Okay, so these are the 5 types of audit or 5 principles on which CNAG's audit focus on. The first is financial audit. We're going to study compliance, performance audit, comprehensive audit, propriety audit. Let's see one by one. Financial audit. It's pretty simple. In financial audit, CNAG focuses on financial statements of the central government and state government, and it simply tells whether these financial statements are as per applicable financial reporting framework. That means, are they as per the law, rules, regulations, and accounting standards applicable to those particular financial statements, and whether these financial statements give true and fair view. So this is very similar, in fact same as what we do in regular financial audit. Now, apart from that, apart from focusing on financial statements, apart from focusing on financial statements, they also focus on the internal control systems which is used for preparing, presenting these financial statements, whether this internal control system is well designed, implemented properly, is it operating effectively. So they focus on the internal control system also. They also focus on one important thing. One of the most important thing for any entity and government is assets. Whether assets are properly safeguarded, there are good system for assets, where the assets appearing in financial statements, where they really exist. Okay, so whether assets are properly safeguarded, whether assets are genuinely there. So they focus on financial statements, then the system which was made to prepare financial statement, and they focus on safeguarding of assets. That is the very important thing for any organization and also for the government. After financial audit, we go for compliance audit. In compliance audit, two types of things can happen. Okay, 2 types of audit. Number one, compliance audit can be of a particular transaction subject matter. Compliance audit can be for a particular transaction, whether it is a income transaction, expense transaction, asset related transaction, liability transaction, whether a particular transaction is as per constitution, below that law, below the constitution, act, rules, or regulations or orders issued by any authority, whether they are as per that. For example, helicopter deal is as per that, Rafale deal is as per that. There's one more thing which is done in compliance audit. There can be direct evaluation of the law itself. CNAG may select a particular law, study it, read it, study it, understand it, and then see whether it is against any constitution or any other law or regulation orders of the higher authority. Then whether that law talks about proper steps and procedures, proper internal control system for any income or expenditure. Then whether that law talks about maintenance of clear record keeping for the financial activity which is being done. And then finally, whether that law is successful in achieving the objectives and aims. So either CNAG in compliance audit, either CNAG is going to evaluate a particular transaction, whether it is as per law, rules, and regulations, or it is going to study the law itself and see it's again a sequence. The most important against constitution. Then whether it is having proper systems, whether it talks about proper system, steps and procedures, controls for income expenditure. Then whether it talks about record keeping, maintenance, and its audit maybe, and whether this law is successful. Compliance audit can be performed in variety of ways. There are different ways of performing it. Either it can be done, if it's a very big thing, it can be done separately, individually, as a separate compliance audit. It can be done as a separate compliance audit, or it can be done along with the audit of financial statements. It can be done along with audit of financial statements, okay, or in combination with performance audit also. In combination of performance audit also, okay guys. Guys, in these sessions, I try to have, just focus on the concepts. I don't interact much, okay, because we have to do it in less and less time. Now, so I don't look into the chats very often. But you can, if you want, you can put any of the comments. If you like these videos and our efforts, do once the video is over, do put your lovely comments. I'll be very happy to read them, see them. Now, this time in the module, they have come up with compliance audit process. Compliance audit process, and it's very similar to a regular audit process. It has 5 steps. Number 1, it talks about having a annual compliance audit plan and following general principles. It talks about general principles and annual compliance audit plan, then planning an individual compliance audit. It talks about general principle that should be followed and having annual compliance audit plan. It talks about planning individual compliance audit. It talks about gathering evidences. It talks about forming conclusions. Then it talks about reporting. So it talks about 5 things. Okay, guys, we cannot remember so much. So just an overview. In first phase, they talk about, just like any other audits, it's very important to follow the ethical principles while performing compliance audit. Very important that the team, everyone follows the ethical principles and other specific principles which are required for performing compliance audit, like how to interpret law, rules, regulations, how to see whether there is a contradiction, and so on. Then they say that CNAG should prepare an annual compliance audit plan. It should select the entities and the transaction for which compliance audit should be done. It should select the auditable entities, okay, and then it should also select which units of CNAG, which units of CNAG should do the compliance audit, and then ultimately prepare implementation plan, that which particular audit unit is going to do which particular audit of which particular auditable entity. So annual plan should be created. General principle should be followed, and annual plan for compliance audit should be done. In the planning process, very simple. When you plan an individual audit, first clearly define what is the ultimate objective. What is the ultimate objective? What are we supposed to comment ultimately? What is the scope? Okay, what is the scope? Identify the subject matter on which document we are supposed to comment, and what will be the criteria, benchmark with which we should compare. Like account Ind AS and AS are the benchmark. Ind AS and AS is the benchmark, okay, with which we check our financial statements. So it's pretty simple. First define the objective and scope clearly. See, I have numbered objective and scope clearly, subject matter. Then you make audit strategy. Broad guidelines. Then you make audit plan. Then you start understanding entity and its environment, including internal control system. You establish the maturity level, and then you identify and assess risk. It's a very common thing, guys. Okay, first we are setting objective and scope, subject matter criteria, then strategy, then plan, then maturity, then risk assessment and the risk. So just remember the flow, guys. Flow is important. Then you start actually start collecting audit evidence to various methods. As you get information, you can keep updating your plan and see whether they are indicators of non-compliance or actual non-compliance. Collect more and more evidences about them. That's what the compliance audit is all about. Once you get all the evidence, sufficient appropriate audit evidence, see whether they are material non-compliances you have come across. Make proper conclusion about them, whether there is a non-compliance, yes or not, to what extent, what its impact, document them. Then make a report. Okay, prepare report about the non-compliances and what is the response of the entity, those who have done non-compliance, what is the response. So very simple process is there. And then the follow-up of what about your reports. Now let's talk about the audit boards. Let's talk about the audit boards. Now what are these audit boards? Let's understand this, guys. So audit boards, we have to discuss 3 things. First of all, CNAG has its own department, Indian Audit and Accounts Department, which does all the which does all the audit for it performs all different types of audit for CNAG. Okay, for government departments, ministries, corporations, and companies. So we have a IAD department. Now, then next you explain that there is a audit board. Okay, these are the audit board which are constituted by CNAG. These are advisors to CNAG. It has experts. There can be, they have expert of different types of audits. So there can be general audit boards, or there can be industry specific, steel specific audit board, pharma specific audit board, and so on. So these boards are having specialists and experts which are advisors to CNAG. There can be general audit board, there can be industry specific audit boards. Now what exactly happens? Indian Audit and Accounts Department, the teams of IAD, they do all the audit. They do all the basic audit work. They come up with a lot of findings, and they prepare a lot of documents, and they prepare a preliminary report. And all these documents, their findings and reports are presented in front of an audit board. Audit board studies them properly, appraises the work. They understand what are the issues and problems. They talk to IAD team. They talk to government departments and ministries, okay, to the management who are doing these things. They understand the problem very well. They understand who are responsible for it. They also come up, and then they finally come up with the recommendations and suggestion what should be done in the given situation. They send the recommendation. They send the reports to CNAG. Finally, CNAG evaluates it and may take all the recommendation or some of the recommendation, finalize the report. So basically, they are the brain. They are the evaluators. They are the supreme analyst, and they give recommendations. Recommendation may or may not be followed by CNAG. So you need to explain what is IAD. You need to explain what is audit board, and then you need to explain what work actually happens, what IAD does, and what audit boards does. Now, next very interesting is comprehensive audit. Next very interesting is comprehensive audit. Now, guys, there is a comprehensive audit, and then we have performance audit. So if you study comprehensive audit, many times use the word improve the performance. When you study performance audit, again you get the feeling that we're improving things. So it's difficult to understand what's the difference between two. For the sake of understanding, for the sake of retaining the points, I will say that comprehensive audit focuses on a government entity, a government organization. It studies all the aspects, everything about a particular government organization, government entity, and tries to find out how we can improve that particular entity. So comprehensive audit is more focused on government corporations and government companies. Now, performance audit is more focused on the government schemes and the entities which are implementing government schemes. They're just like we have Ujjwala Yojana, or Kisan Samman Yojana, or Manrega, rural employment schemes, or Ayushman Bharat scheme, and so on. It focuses on the schemes. Okay. So now let's talk about this, the comprehensive audit. So comprehensive audit, we select a particular PSU and we study all the aspects and parts of that PSU. What exactly we study? See, this is in a flow. Without any mnemonic and shortcut, we'll be able to remember all the points. And that's the beauty of this. So the most important thing any organization does, the first thing they do is research and development. So we focus on whether proper research and development is done for new products and services or new technologies. Once research is done, whether proper planning is done to develop projects, to develop the factories, to implement that research. After planning, whether plans are formulated and implemented, and whether factories are made. Once factories are made, they focus on whether the capital cost is as per the plan. Is it more, and why it's more? After the factories and projects are created, next is whether capacity utilization is good, whether it's under capacity utilization or there is a shortage of capacity. Then during the production, whether cost control is done, whether proper cost control is done, whether wastage are avoided, unproductive things are avoided. Finally, whether the production is economical and effective. And after the sale of goods and services, whether a planned rate of return, reasonable rate of return is earned, and whether this project factory is properly repaired and maintained. So guys, it's in a flow. First comes research and development, talk about that. Then come project planning, then formulation and implementation, then capital cost comparison, then capacity utilization, then comes cost control and wastage control, and then comes economical efficient production, then comes the return, and then repairs and maintenance. So if you remember in this manner, you will be able to remember comprehensive audit more. Then we talk about propriety audit. Now, propriety audit is a type of audit, type of examination, type of evaluation. Word propriety comes from the word proper. Whether expenditure is proper, it simply means go beyond law, rules, and regulations. Expenditure can be as per law, rules, and regulation, but focus on two things: purpose and the process. Purpose and the process. Is it giving benefit to public at large? Is it for public at large? It should not be particular person, caste, and community. It should be for public at large. And process, whether proper process was followed for doing that expenditure as per customs, as per standards set. Is it giving real benefit? Is it fruitful for people? So is it for public at large, and is it giving real benefit to people? We focus on two things. If these two things are achieved, we say that it's a proper thing, it's a propriety audit. Now, how to decide whether an expenditure is proper or not? CNAG has made certain principles. They have made certain principles, guys. Okay. Now they have made five principles. I've grouped them just for the purpose of retention. So three principles are purpose oriented. It should not be for particular individual. General principles. The expenditure should not be for particular person, caste, community. Okay, that's one. That's very important principle to check with the propriety. It should not be for directly, indirectly for the sanctioning authority. Only government authorities and government employees are getting benefited. It should not be for that. Then, if any reimbursement or allowance is planned for the government employees, it should not be a source of profit for them. There should be genuine expenses, there should be genuine bills and proofs and evidences, and then only reimbursements and allowances should be given. It should not become a source of profit for them. So it should not be for particular caste person. It should not only for the approving authority. It should not be for benefit of government employees, unjustified benefit to government employees. Then process. Vigilance. Same kind of vigilance should be there while doing expenditure. Just like we spend our own money, same kind of vigilance should be there when you spend government's money. Okay. Then prima facie, it should not be more than the occasion demands. So if the expenditure fulfills these principles, we can say that it's proper. It's proper. Now, how to conduct a propriety audit? How to conduct a propriety audit? Okay. So this time in module, how to conduct. Now it's again very simple, guys. First comes planning. If you want to propriety audit, we should see whether proper planning was done for expenditure. What is the purpose of expenditure? For what we have to do this expenditure? Okay, what is the purpose, objective, and carefully plan how this expenditure should be done. Then proper process, like there should be a tender process, quotation should be, and so on. When the expenditure is done, whether before expenditure, whether it was evaluated what kind of results it's going to give, whether proper planning was done, proper channels and process was selected, then before doing expenditure, whether results were appraised, whether alternative actions plan were evaluated. Okay. And then finally, when the actions are taken, decision taken, expenditure is done, whether public at large got the benefit or not. So we go and we check planning, we check proper channels and the processes, we check whether the results were appropriate results before doing the experiment, whether a result appraisal was done, then alternatives were studied, and then finally whether public at large got the benefit. That's the simple step, guys. I remember there are a lot of points. That's why these revision lectures are there. Listen to them again and again. And broad flow should be there. Once you have a flow, you will be able to write good things. You cannot cram everything. It's not possible to cram. It's not possible to cram. Not possible to cram everything. You have to remember the flow overall. Even if you write 60-70% points, it's absolutely fine. Then we talk about performance audit. We talk about performance audit. Now, performance audit, guys, there are two types of questions. There are two types of questions. There are two types of questions which can come in performance audit. Okay. First, what are the issues addressed in performance audit and planning performance audit? These are two very famous questions which will come. Now, issues which are addressed and considered while doing performance audit. Let's understand this, guys. Let's understand this. So, in performance audit, we focus on three things: economy, efficiency, and effectiveness. So let's first talk about economy. What do you mean by economy? We focus on, in performance audit, we focus on three E's. And first is economy. We focus how can we reduce the cost of acquiring the resources? How can we reduce the cost of acquiring resources? How can we reduce cost of acquiring cement, steel, say air conditions, equipments, and so on, without compromising with the quantity, quality, and the time of delivery? Then next is efficiency. We CNAG focus on how resource utilization can be maximized, how input output ratio can be maximized. So what matters are studied. Very simple. First, procurement. To maximize the output, first we focus on procurement, whether procurement was done properly, whether resources of proper quality and proper specifications were acquired. After acquiring, whether they were well protected and maintained to avoid wastage. Then whether there is a proper management for resources, like there should be proper for resources, there should be proper department should have regulation and should be properly executed. Then finally, if there are proper departments, whether operations are happening efficiently and there is an optimum utilization of resources. And finally, whether the cost of consuming resources is controlled, it is reduced. See, it's in a process. First comes procurement, then comes protection and maintenance, then comes management in the form of departments, then comes operating procedures, then come optimal utilization and overall cost. Next we talk about is effectiveness. We talk about is effectiveness. Okay. Now, guys, when we talk about effectiveness, simply imagine any government scheme. Suppose Manrega scheme. What happens in Manrega scheme? Now villagers decide they want road, they want schools, they want hospitals in a particular village. Then if they want it, they make a project, get it approved, they work on it, okay, and they get remunerated. So two things are happening. Infrastructure is getting developed. And at the same time, people are getting benefited out. They are getting employment. So two things are happening. So if you want to study the effectiveness, you have to focus on three things. Number one, we have to first understand the scheme. We have to see the results, and then we have to give the suggestions. Let's first talk about understanding the scheme. We need to first understanding the overall objective of the scheme. So it is developing infrastructure and they are giving the employment. Great. Then we need to understand whether these objectives, whether these objectives are proper, whether 100 days of employment is sufficient, is it consistent with the government policy, is it suitable, proper, and then what are the different then we understand what are the problems in achieving these objectives. People are not aware about the schemes, that's the problem. They don't know how to develop a project, that's the problem. They don't know how to get approved, that's the problem. Or they are getting very low wage rate, that's the problem. Or there is no money, funds, that's the problem. Understand objectives, are objectives good, and what are the problems in achieving those objectives. Analyze the results. So these schemes may have their own internal control system, that's called management control system, where they continuously measure what's happening in the scheme. They may keep count of how many projects were prepared during a month, how many projects were approved during the month, what is the status of the projects, what is the status of the fund flow, what is the utilization, and so on. There will be management control system, internal control system, and various reports will be generated. Go and study that. So as per those reports, whether the scheme is successful, is it really effective, then go and see the practical life. Is it so whether it is bringing real socio-economic impact on the area, and whether the components, there can be a training department of the scheme, there can be developing project department, there can be implementation department, payment department, so on, whether all the components are working properly. Go and evaluate the results, give suggestion, what alternatives we can hire people for developing projects, we can create job vacancies, we can contact freelancers, okay, we can train students, what can be alternative set of policies, how program can be made more effective, how this program is overlapping, contradicting, or different with the other programs, how they can be merged and work together. So suggestions can be given, alternatives, how to improve effectiveness, how to deal with the other projects. Then performance audit of minimum wages act. Performance audit of minimum wages act. So we all know minimum wages acts. This is a new thing which was added in the module. Minimum wages act says that in a particular region, particular industry, this should be the minimum, this should be the minimum wages, okay. So first go and obtain the knowledge, go and, as an auditor, if you want to see whether this act is working properly, is it really effective, is it bringing real change in the life of people, first obtain the knowledge, go to different types of industries, go to ground level, understand what kind of remuneration is paid, is it monthly basis, hourly basis, unit basis, how much is paid, and then you go and evaluate what was the situation before minimum wages act, what is the situation after minimum wages act. Is it really bringing any socio-economic impact, whether life of the laborers is improving, whether economical, the cost of applying this particular act, whether this was economically implemented, is it really very effective, whether people are getting benefit, what are the problems, legal problems, practical problems, and then report on it. What's the outcome and how it can be improved? So obtain knowledge, evaluate it, talk about 3 E's. When we talk about performance audit, how there was a minimum wages act, there was a department for it, whether the costs of running the department and the act is economical, whether there's an improvement in the efficiency, effectiveness of the results, shortcomings, and reporting. Now, planning performance audit. So first thing is understanding the program. Like Manrega, I said, understand the program and the entity which is implementing this program. Once you understand the program, next is set the objectives. That our objective is to check Manrega scheme for the South region for 3 years, objective and scope. Then decide the criteria. Criteria is the benchmark against which things will be compared. It will be used for comparison. Like financial statements are continuously compared with accounting standard, Ind AS, AS. Set the criteria. Then what will be the audit approach? It will be online, offline. Decide the audit approach. What kind of questions will be asked to the government department and their employees? Train our audit team. Okay, train our audit team on how to perform this audit, how to ask the questions, how to understand, evaluate the answers. Prepare an audit design matrix. So what is that? It's simply a table. It is simply a table where in rows we'll be having different questions and procedures we are performing and what objectives we are achieving. Then to implement audit matrix, where a proper timetable and resources are allocated, and whether this program is interpreted to the entities who are implementing these schemes. So in planning, it's pretty simple, guys. First, understand the program and the entity implementing it, decide the objective and scope, what we want to check, what will the criteria, what will the approach, online, offline, what are the questions, train the team, design the matrix, timetable, resources. Then we talk about elements of PSU audit. Elements of PSU audit, guys. Now, there are three types of parties. In any PSU audit, you are going to see three types of parties. Now, the party which prepares party which prepares the financial statement with the subject matter which will be checked, that's called responsible party. That is called responsible party. Okay, that is responsible party. Then the party which evaluates, examines the documents, that's called auditor. And the party which reads the reports, that's called interested party. Interested party. There are three types of documents. Subject matter, that is the financial statement or statement which is evaluated, examined, that's called subject matter. Then the criteria which will be used, criteria is the benchmark. It is used for comparison whether performance is appropriate or not. That's called criteria. That is the second document. Third, subject information is nothing but audit report. Subject information is the report which tells whether subject matter is reliable or not, whether things are proper or not. A report is there. That's called subject information, which is used by the users. They are saying that there broadly two types of examination can happen in PSU audit. Either there can be attestation engagement. Either there can be attestation engagement. In attestation engagement, what happens in attestation engagement? In attestation engagement, basically financial statements, documents are prepared, documents are evaluated as per the criteria whether they're properly prepared or not, and we comment on the reliability of the document. We simply comment on the reliability of document. That's called attestation engagement. That's what happened in financial audit example. Then in other types of engagement assignments, they are called direct reporting engagement. In this auditor studies the situation, evaluate the situation, measures the performance, measures how things are done, evaluates them, and himself prepares the report explaining everything, whether results are good, whether performance is good, what things should be done to improve it. Example is compliance audit and performance audit. So in one, we simply focus on reliability of document. In other, we focus on the activities, their performances, and how to improve the performances. That's called direct reporting engagement. Determining the criteria. Now we know that if we want to check something, we need a benchmark, we need a base from which the comparison should be done. If we want to check financial statement, we want a base. So accounting standard is that base, India's is that base. So when we go and perform the performance audit and we want to evaluate whether processes are proper, results are proper, we need something for comparison. Now the benchmark, the standard which is used for evaluating the performance comparison, that's called criteria. First, define criteria. From where are you going to get this criteria? There are different sources of the criteria. Okay, ER is engineer. So engineer is a criteria for MPSC. So civil service exam, Maharashtra. Okay, civil service exam just like UPSC. For just a shortcut. Engineer is a criteria for MPSC. E stand for expert opinion. So experts' opinion of what should be done, how it should be done, what should be achieved, that can become a criteria. R stand for research report. If there are already well researched reports on this particular area, that research reports can be used as a criteria. M stand for manuals. If entity has well designed manuals, what should be done, how should be done, that manual can be criteria whether things are done as per that or not, and things are achieved as per that or not. Then P stand for policy, standards, directives, and if government policies, directives, and guidelines may specify what should be achieved, that can become a criteria. Or recent scientific knowledge can be used to develop a criteria. Recent scientific knowledge can be used to develop a criteria. Finally, if the implementing entity have themselves developed some criteria, they've developed some criteria, or similar entities have developed some criteria, it can be used. So these are different sources of criteria. What are the content of commercial audit report? What are the content of commercial audit report? CNAG has to comment on commercial aspect of the government, whether commercial things are properly done or not. Okay, whether commercial things are properly done or not. Now let's understand the commercial aspect. Okay, so first thing is, in commercial audit report there will be a specific introduction, that what were the objective and scope, what was covered, how things were evaluated, and the results will be there. Introductory portion will be there. A kind of a summary will be there of a commercial aspect of any government, central government, state government. Introduction. Then, if introduction, objective, scopes, and summary of significant findings and recommendations will be there. Then, very interesting and important, what are the comments and recommendations if any of the issues are covered, studied, evaluated by audit board? What are the suggestions of the audit boards? If there are some issues and results which are not taken up by the audit board, even they should be expressed. So if audit board has taken up certain findings and what they have recommended, it should be there. If they have not done, even they should be specified that these things were the findings and suggestion of the IID department. Apart from that, what summary of company auditors report? So in commercial audit report, there will be introduction of the commercial activity, what was done and what were the key results. Then what audit board has to say about certain issues, what other issues which are not covered by the audit boards, what are the recommendations, what are the issue findings and recommendations, what company auditor has to say. So it will have important points and summaries from different people. What CNAG has to say in general first, then what audit board has to say, then other issues which are not covered by audit board, then the company auditor. In small states, commercial chapter we will include in the main financial audit only. In big state, it will be separate commercial audit. Okay, and it will cover performance of the companies and overall companies and the corporation, good things, bad things which are done. What is the role of CNAG? What is the role of CNAG in financing committee, in financial committees? What is the role of CNAG? It's very simple. The first thing, step number 1, CNAG explains committees, their report, what is in the report, what are the matters, what are the issues, what are the wrong things ministries and departments have done, and what questions should be asked to them. This is explained by CNAG. Then once ministries reply, then interpreting the replies, understanding the reply, whether replies are reliable, what replies have to say, interpreting it and explaining it to committee. That is the role of CNAG. Then after receiving reply, drafting the final conclusion, what were the issues and matters, what was the reply, what is the important conclusion, whether ministries have done good things, bad things, what they should do, the recommendations, preparing report for the parliament. Then ministries had to submit what actions they have taken as per the reports of the committee. Studying those action taken reports, again CNAG helps in evaluating that. Apart from that, CNAG must be giving 100 reports. Committees hardly select 10 reports. On other 90 reports, written answers are obtained from the different ministries and departments that these were the issues and problems. What are your justification for them? How are you going to avoid them in future? Now these things are required. Critical analysis of the reports is required. Either finance committees will take some of the reports, or written answers will be taken, so that no one takes CNAG reports lightly. Okay. So guys, we are through with we are through with PSU audit, and next we move towards internal audit. Okay, just take 1 or 2 minutes of gap. Okay, guys, let's start with internal audit. Okay. Now the first thing, now this particular chapter number 16, we can uh, four type of things are covered. Okay, it's covering section 138. It is covering 138. That's interesting. It is covering few things from SS 610. SS 610 is already studied in a different chapter. Still, it is having some elements of 610. There's few things which are coming from SIA, standards on internal audit. Standards on internal audit, and then there's some traditional theory. So it's a mix of a lot of things. Let's understand it, guys. So first of all, let's understand scope of internal audit. As per SS 610, the scope means range of activities which are performed, by the internal audit. So internal auditor can do work, can do activities related to the governance. It can evaluate the it can evaluate and help TCWG in improving their governance. So activity related to governance, it can evaluate and help in improving the performances, how to improve the performance of the organization, how to improve their profits, their revenue, their production, and so on. It can help in ensuring that work is done ethically. It's ethically. So it can help in governance process, in improving the performance, in improving compliance with ethical principles. Then it can help in risk management. So internal auditor can go and see in each department what is the different types of risk, what is the level of the risk, and how to compensate the risk. Can help in evaluating internal controls. Yes. So the most important four types of controls are most important. Okay. First, steps and procedures for compliance of law, rules, and regulation. Then next, controls related to safeguarding assets. Then next, how to make operations efficient and effective. Then next, ensuring that the uh, financial information system, accounting system, financial and operational information systems, information system, and statements are reliable. So the scope is reviewing law related steps and procedures, internal control system, then related to then safeguarding of assets, ensuring operations effectiveness, and ensuring that the operational and financial information is complete, accurate, and reliable. So internal auditor can cover three types of things: activities related to the governance, activities related to risk management, activities related to internal controls. Now, what section 138 says? That 138 says very simple thing. It says that who can do internal audit? It can be done by chartered accountants, it can be done by CWAs or such other professional. There's a question on this: such other professional. Any person having good knowledge of the accounts, internal control systems can do it. Any person, professional. He may be in practice, may not be in practice. He may be having COP, may not be having COP. He may be employee of the company, or he can be independent professional. So a lot of people can do it. They're opening up the field. Then the next is legal firm. Very interesting. Can be individual, can be partnership firm, can be body corporate. That's exactly opposite to statutory audit. Can be body corporates also. Then applicability. It's applicable first of all to all listed companies. Then we talk about unlisted companies. Unlisted companies, there are four criteria. Traditionally, if you look any company, you will see deposit amount is always low. Deposit amount, more than that you will find share capital, more than that you will find borrowings in any entity, and more than that you will find turnover. The four things. So in public company, if deposits is 25 crores and more, then double that. If the paid up share capital is 50 crores or more, then double that. If loans, borrowings are 100 crores or more, from banks and financial institutions, then double that. Turnover is 200 crores or more. It is for public company. For private company, there are only two criteria: the borrowing criteria and turnover criteria. The limit being same, 100 crores and 200 crores. And all these amounts are as per latest audited financial statement. That means these are previous year data, not the current year data. Very important when you solve the case. It is preceding year. So that on the start of the year, we know whether internal audit is applicable or not. Appointments, terms and conditions, everything will be decided. Everything will be decided by whom? It is to be decided by the audit committee. Audit committee will select who will be the auditor, what will be terms and conditions, scope, coverage, powers, and remuneration. And if there is no audit committee, board of directors will decide. So a lot of important things are given. Now there is a traditional theory, guys. This traditional theory, scope of internal auditing. You are not going to get a direct question on this. You are not going to get. One more thing, guys. Wherever I have marked this pink star, in all the chapters, if you see description, there is a link. In all the chapters, we have given a pink star. So things with pink star are important. Rest you can listen once and focus more on the things which are marked as important. Okay. So scope or coverage. Okay. So there's a shortcut. Internal auditor can grasp a lot of things. That's a shortcut. Let's see one by one. So I stand for internal. So these are not very important. Just listen to it once. What is scope? Coverage. These are traditional theory. So internal controls, definitely. It is one of the biggest duty of the internal auditor to go and evaluate internal control system. Are they designed properly? Are they operating effectively? Are they operating effectively throughout the year? Whether the cost of operating internal control is how we can reduce the cost. So first, are they designed properly? Are they operating effectively throughout the year? Are they really good in reducing the control risk? Whether control risk is reduced, whether inherent risk is compensated, where the cost of operating internal controls is at its minimum, and what are still the limitations of the control. So yes, that's the most important thing, is to go and evaluate internal controls, their designs, their operating effectiveness throughout the year. Is it really reducing the risk and compensating the risk? Is how we can improve the cost efficiency, and what are the limitations? Then one more I, it focuses on information. Definitely, internal auditor focuses on whether operational information and financial information which is generated in the organization, is it complete and accurate and reliable? Is it complete, accurate and reliable? Okay. For this they examine basic records, whether operational and financial information is properly captured and recorded. Then whether it also records exceptions, unusual things, unusual records and highlights, whether everything is getting captured, unusual things are getting highlighted, and then on that basis, whether timely basis reports are prepared and given to management, and what is the cost involved in the whole process, how it can be minimized. So definitely they focus on the operating and financial information system, and they go and check basic things. Then they also go and see whether goals and objectives are properly achieved. So first they go and see whether goals and objectives are clearly stated and attainable, whether at company level and department level goals and objectives are clearly defined. It should be quantifiable, and it can be monetary. It should be quantified, monetary, non-monetary. There should be proper goals and objectives, whether it is profits, whether it is revenue, whether it is production, whether it is capacity utilization, whether it is whether it is utilizing the resources. It should be well quantified. There should be complete plan for achieving it, and there should be element of flexibility in the plan. So they focus on this, whether goals and objectives are properly defined, quantified, informed to everyone. There's a plan prepared, and it's a flexible plan. Then this was asked, utilization of resources. First of all, if you want to evaluate utilization of resources, we need something to compare. We need a criteria. We need a benchmark standard, and that's called operating standards and norms, OSN. So first, if we want to talk about resource utilization, whether it's good or bad, and if it's bad, how to improve it. For comparison, we need OSN, operating standards and norms. So, there should be first identify for what resources, whether it is space utilization, whether it is labor utilization, whether it is machine time utilization, whether it is electric utilization, what resources we are supposed to focus on. Then see whether proper OSN is made for all the resources, operating standards and norms. See the method of developing OSN, whether it is based on the past, whether it is based on the scientific knowledge, whether it's based on experts, what kind of assumptions are taken, one shift, two shift, three shifts, temperature, the temperature, in temperature, and so on, whether OSN are detailed enough for each resource so that we can evaluate the performance. So go and see that resources are identified for on which to focus, there whether there is a OSN, okay, whether there is a OSN, then we need to focus on the OSN operating standards and norms, whether they're properly developed, assumption and detailed. This was asked in exam, guys. Then assets, okay, assets, we need to go and see internal auditor should ensure that there's a proper system for the assets. For all the important assets, there should be segregation of duty. Multiple people should be involved in handling those particular assets. There should be good internal control. There should be segregation of duty. Yeah, for tangible and for intangible, both should be covered. There should be physical controls. There should be proper record. There should be regular reconciliations. Then internal auditor himself should go and see whether there is an existence of the asset, whether assets are properly accounted for, whether they really exist, whether loss is recorded. So go and focus about the system which is required for safeguarding assets, and go yourself and check whether assets are whether proper records are maintained, proper physical verification, proper records are there. Go and attend physical verification, compare whether they really exist, the loss, and so on. Then, so guys, these few things are important. They will ask targeted in exams: resources, assets. Then structure, organization structure. It's very important that organization has good structure. So it just imagine the hierarchy and the reporting structure, that there is a managing director, below that there are function wise directors, then there below that there are senior managers, below that they are associate, below that there are employees, and so on. The organization structure, if you want to ensure that your organization performs well, there should be well defined organization structure. Okay, let's understand. There's a shortcut. GM Motor bans defective structure. G stand for grouping. All similar type of activities should be grouped activities. Grouping all similar activities, related activities should be grouped, and it should come under one particular position. For example, all IT related work should come under one position, all security related work should come under one position, our purchase related work should come. So there should be grouping of activities, and it should be responsibility of one particular group, one particular department. Then M stand for process of managerial development. Ensure that you are continuously in fast growing organization, you are continuously developing the next set of managers who is going to manage new branch, new departments, new businesses. There should be development of the managers. Then B stand for balance. There should be satisfactory balance between authority and responsibility. You should give powers and you should also give responsibility. Both should be given. Only giving authority is not good, only giving responsibility is not good. Then bans, N stand for no overlapping. They should be clearly defined. This work will be done. There should not be overlapping of the activities between the headquarters and the operating units. Clearly defined what is the work of headquarters and what is the work of the staff of the operating units. They should not be overlapping. Otherwise, there will be waste of resources and time. Then span. Number of people one person can handle, number of people who are working number of people who are working under one particular manager, that's called span should not be very less, span should not be very big. There should not be dual responsibility. One person should report to one person only, and if there's a dual responsibility, it should be clearly defined what is primary responsibility and what is secondary. One department should not dominate on other departments or other functions. Structure should be simple and economical. It should be light at the see. People at the top are paid more. It should be light at the top and it should be heavy at the bottom. Then only it will become economical. So these are the things which are evaluated by the internal auditor. Evaluated by the internal auditor. Then policies, they also evaluate department wise, segment wise policies, department wise policies, how it can be improved. There is a periodical review of the operations of the departments and what are the weakness and how it can be improved. So focus on the policies and procedures of the departments, evaluate them and how it can be improved. Now guys, next is in this new course, they have new course they introduced. They've introduced managing internal audit function. So there's a SIA, Standards on Internal Audit 210, no need to remember it. And it talks about managing internal audit functions. So it explains that how it should be managed. So first, that just like any other audit, internal audit should be well planned. There should be an overall plan. What things we are going to cover, there should be overall plan. What is the scope? What are the objectives? Methodology, manual, electronic, what kind of methodology which you are going to use. So first, plan. The most important thing will people related. You should clearly define how many people you are going to need, how many people you are going to need to perform this audit, what will be their skill set, seniority, knowledge, experience, and arrange those resources. Then also identify what kind of consultants or experts which you are going to need, external resources. So what kind of internal team will be required, what kind of external resources will be required as a consultant. Then supervision. There should be continuous oversight when people are working, or a quality, there should be quality program which should be prepared and given to people, and there should be continuous oversight how people are working. And there should be a regular reporting to all the stakeholders, to all the TCWG audit committee and TCWG, because they're expecting the reports. So regular communication, there should be regular reporting. So if you want to manage a good internal audit, there's a broad overview. There should be good planning. You should think about internal staff management, external resources required. You should think about the supervisions. There should be quality program. There should be supervision where people are following it. Then there will be communication. So broadly, they're talking about the four things. Then with respect to accounting function and financial records of organization, the responsibility of internal auditor include. Okay. So basically it gives us what are do's and don'ts. What are do's and don'ts? What should not be done by the internal auditors? What should not be done by internal auditors with respect to accounting department? What should be done? Don't. First of all, they are supposed to, what or don't do these things. They are saying that don't have close relationships with the accounts, don't have close relationship with the accounts department and people involved in the accounting process. And also there should be independence with respect to accounting staff and accounting department, with respect to operational staff and other departments. So don'ts is stay away, don't have close relations, maintain independence with respect to accounting staff, with respect to operational staff. There should be independence. So this can be asked as a case study, that you are supposed to maintain independence, whether it is independence with respect to accounts department and whether it is independence with respect to operational responsibilities. Then so stay away from the people, maintain the independence, then keep informed what's happening in the organization, what big changes are there, whether there are good internal controls overall, and whether there are deficiencies. So the very broad thing, guys, not very important. These are do's, then in general, don'ts, and then keep advising how to improve things. So they are saying that when you're dealing with the accounts department, first is to stay away from them, to stay informed, understand what's happening, and keep advising. Okay. Again, not very important. What are the fundamental principles? So just like a regular auditor supposed to fulfill ethical requirements and independence on the same lines, certain core principles, independence. Even intern auditor is supposed to maintain some kind of independence. He should not be dependent professionally, financially, business wise, dependent on the organization and its department. There should be independence of mind and appearance. The chief internal auditor should try to remain independent. Okay. So and then there are points related to this only. There should be fair, avoid conflict of interest. Um, Conflict of interest means when the personal interest and professional interest they contradict with each other. That's called conflict of interest. Avoid conflict of interest. Avoid personal benefits and so on. So they should be independent. They should be then integrity, honest. Very simple, guys. Even they are supposed to definitely independence of statutory auditor is much more than internal auditor, but internal auditor is supposed to remain independent, supposed to remain integrity, honest, truthful. Objectivity means being unbiased. Keep aside personal likings and dislikings. Don't work under any pressure or influence, and keep aside conflict of interest. So independent, they are supposed to ensure independence, integrity, and understand the field, the overall what they want to send. You have to explain own words, guys. You cannot rectify each and everything. It's not possible even to remember the wordings. Understand the headings and express in your own words. Understand the headings and express in own words. Then the qualities, guys. Let's talk about the qualities of internal auditor. Supposed to have good knowledge, expert knowledge of internal control systems. Below that, accounting systems. Uh, First, financial matters broadly, most important financial matters. Then below that, internal controls and the accounting matters. Basic knowledge of the business and the management. Then laws and taxes, how systems work, technology and commercial practices. So qualities, when we talk about qualities, there should be expert knowledge of the financial matters, accounting systems, internal control systems, basic knowledge of the business practices, management, laws and taxation, and so on. Performing internal audit, they are talking about 5 steps. Very simple. KPI, key performance indicator of audit report. The 5 steps. First, very simple, guys. 5 steps of internal audit. Obtaining knowledge of business and its environment, then planning internal audit, gathering information, evidences, performing examinations, and then reporting. Obtaining the knowledge, it's pretty simple. Obtain the knowledge of the industry, how many players are there, what is the law, rules, and regulations. Uh, understand the regulatory environment, understand the industry, the players, and the regulatory environment, whether what kind of regulations are there. Go and meet people and understand the environment right now in the industry. What's happening, is it booming, is it declining? Go and read business documents, what kind of business they are doing. Understand the IT system. So the first step is all obtaining knowledge about the business and its environment. So first we understand the regulatory environment, we understand the business environments, we go and for that we go and do meetings. Business, guys, it's not able to remember all the things. Just understand the flow. The flow is pretty simple. First comes regulation. First, if I remember, I think first comes industry, then comes regulations, then comes business environment. Go for meetings, documents, then comes IT systems, then plan for it. No need to remember SI 310. Okay. First decide the audit scope, which departments you are going to cover in internal audit, what activities you are going to cover. decide the scope, get it approved by audit committee or board of directors as the case may be. Then make a plan. Uh, prepared by the audit managers and approved by the internal audit head. A plan should be prepared, and then plan should be informed with the whole team, and proper direction should be given to the team how to implement this plan. In first quarter, what we are going to check, second quarter, third quarter, fourth quarter, and so on. Finally, keep gathering the information. First, give advance intimation when you are going to come for internal audit. Try to obtain information directly from people, from the systems more and more. Always check whether information is complete and accurate. Then once you get the information, start performing audit procedures, analytical procedures. Always compare with previous year, others. Is it reasonable? Is it proper? For test of details, go for sampling, then perform test on it. Go for inquiry, inspection, match from the documents. Okay. Then make the list of audit issues. Uh, Audit issues. Make interim report. What are the issues, obtain the explanation from people, and document everything once, and then make the draft report. Make it as per SIA. We are going to discuss about reporting, guys, after this. Make draft report, always discuss it. Then finalize the audit findings, what management has to say, and check whether the plans are findings, what action management is planning to check whether the actions are taken or not, and then make the final report. So it is pretty simple, guys. There are 5 stages. So first stage, you say that it's basically understanding the industry, regulatory environment, business environment, internal control system. Then we go for the planning. We decide the scope, we make the plan, we get it approved, we inform everyone, we discuss how to implement it. Then we gather information, we intimate people, we gather information, we check completeness, accuracy. Then we perform analytical procedures, sampling, test of details, we find out the issues, we make interim report, document them, we make draft reports, inform management, inform them audit findings, what is their plan of action, whether plan of action is taken, make final report. Now, that's very important. Internal audit report. Internal audit report is prepared in 2 stages. Internal audit report is prepared in 2 stages. Stage 1 and stage 2. What is stage 1? As per SI 370, first, you should make internal audit process is divided into small assignments. In first stage, you prepare assignment wise report. Okay, in assignment wise report, the various areas in when we talk about assignment wise report. Okay, in assignment wise report, a particular assignment can cover a factory, a department. So internal auditors, what they do is they break their whole process into small assignments. They may check a factory, they may check a godown, they may check a department process, and in assignment wise report there will be complete details. What was the scope, what was the objective, what were the key findings, what was the conclusion, and report is submitted to the local management, local department heads, local management, and to the company also. Then periodic reports. What is this periodic reports? There is a SI 380. SI 380. Now, in stage 2, a comprehensive report. This report contains summary of all the assignment wise reports which are prepared during a particular period, say a particular quarter. It is summarized information of all the assignment wise report, what were the issues and problems identified, what are the solutions, and is submitted to the highest governing authority, that is audit committee. So in stage 1, there is an assignment wise report. In stage 2, there is a periodical report, which is nothing but summary of the assignment wise report. Now, definitely professional judgment is required to make this report. What are the key elements of the report? Let's understand this, guys. You simply recollect what happens in normal audit report, and you can say that you define the scope, what you have covered, what was your objective, what things you have covered, what is the period you have covered, and its executive summary. Summary of the critical things. Okay, so first you explain the scope, you explain what was your scope, what was your objective, what was your scope, period you have covered, summary, and focus on the critical findings. Then you go for a detailed. Once you explain this, then you explain detailed findings, detail all the findings, classification of the findings as issues, high priority issues, medium priority, low priority issues, what are the recommendations, all the issues, and what kind of thing management has done, responses they have done, what they have promised, what action they have promised. So you can say it is divided into two parts. Then follow up, that's very important. Follow up and monitoring. So what is it? In follow up and monitoring, so internal, in this particular activity, internal auditor goes and sees whether their recommendations and suggestions, they go and track whether recommendations and suggestions are followed by the management, whether corrective actions are taken or not. If not, if there are any pending matters, they see whether corrective actions are taken. If not, if there are pending matters, why they are pending, and the report is made. Okay, so in follow up and monitoring, go and see whether all the recommendation of the previous audits are followed by the management, whether corrective actions are taken. If yes, for how many they are taken. If not, for how many they are not taken, what are the reasons. Okay, it is responsibility of the chief. It is responsibility of the chief internal auditor to do it. To check whether the suggestions of the internal auditors are properly implemented or not. There should be, for monitoring, action taken report should be prepared. Action taken report. What is this action taken report? Okay, so in the areas where management has accepted the recommendation and initiated the action, we will explain the status. Okay, that these actions are completed, these are in process, how much is completed, how much time it's going to take. Okay, so first, that we give though so and so recommendation and suggestion were accepted by them, some of them are fully implemented, some of them are partly implemented, what's the status, by what time they are going to be implemented, explain that. If then, which suggestions are not accepted, why no action is taken, and why what is the reason they are not taking any action, report that also. So action taken report is going to have two parts. What suggestion management is accepting, focus on that also, how many are completed, how many are in process, and what they're not, and what are the reasons. So explain what is monitoring and follow up, whose responsibility, and action taken report. Three things you're supposed to explain. How internal auditor and external auditor are different from each other. How these things are different from each other. Okay, they're way different. Okay, the ultimate objective of financial statement audit is giving opinion on financial statements, where here it is helping governance, helping in risk management and internal control system. So overall objective is different. Okay, overall objective is different. Then the people who perform it. So first we distinguish about overall objective. External audit is performed by chartered accountants, independent chartered accountants. Here it is performed by different set of people. They are not as independent as statutory auditors. Appointment is done here by shareholders, generally subsequent auditors. Here it is done by audit committee or board of directors. Okay, here the focus point is financial statement. Focus point here is governance, risk management, and controls. Here reporting is about true and fair view. Here reporting is about the internal controls. External audit reporters used by shareholders, it is used by the management. So people who are performing it are different. The people who are appointing them are different. What after appointment examination is different, reporting is different, users are different. There's a complete difference. Yes, there are common points. Both of them understand entity and environment. Both of them understand internal. There are common things, but the overall thing is different. Then, guys, we already covered SA 610 in chapter 3 in detail. Okay, in detail. What they have done, they have repeated 610 at both places. In chapter 3 also, and there in chapter 16 also. So we have not covered the repetitive portion, only some additional portion which is there. Now we know that in SA 610, we can use the work of internal auditor, and this internal auditor at the same time, we can take direct assistance. Now, what documentation should be done? What documentation should be done if we are taking direct assistance, if we are appointing internal auditor and taking its direct assistance while performing the audit, what documentation should be done? So step 1 related, how we evaluated objectivity and competence of the auditor and how we decided whether to take direct assistance or not. Then step 2 related, in which areas we are taking direct assistance. Then step 3 related, there should be documentation of agreement between internal auditor and external auditor, and agreement between internal auditor and management, between external auditor and internal auditor, that what work will be doing for us for how many days and how many people will be appointed, and agreement with management that they are not going to interfere with the work of the internal auditor for next 15 days, 20 days. Then working papers which are prepared by the internal auditor, that should be documented definitely, and how the work was reviewed. So step 1 related documentation, step 2 related documentation, step 3 related document. I'm assuming that you are aware about step 1 to 3 of 610. Then internal audit as management function. You explain, yes. Management, you explain in management, we plan, okay, what are the broad things we do? Once our objectives are set, we plan how we plan to achieve our objectives. We make departments, we staff people, staffing, we give them directions. We keep continuously supervising the activities. If something is not going properly, we instruct them. That is controlling activity. And you explain that when we have to see whether things are going properly or not. Okay, controlling. Internal auditor plays a very important role in controlling whether the internal control system is happening properly or not. So it helps management in executing the controlling function, the important function. Then internal audit cover 3 types of things. So yes, internal audit is a very important tool which is used by management in executing their management process, in executing controlling of the organization. And it includes 3 types of things we have already seen. Okay, then you explain what is audit trail. Audit trail is set of documents, registers and records with the help of which we can trace a transaction, how it was initiated, processed, and then recorded, and then concluded from start till end. Okay, so audit trail is set of records and documents. You can see audit trail from the software. So in software, you can simply click and see the edit history of a particular transaction. You can see edit log of books of accounts, that's software level. And then at database level, further, technical people can go to the database level and see what are the changes made to database, at what point of time, what kind of changes are made. There should be strong internal controls to preserve audit trail. There should be strong internal control which ensure that audit trail is continuously recorded throughout the year. Nothing is missed. The audit trail is not tampered. It is preserved for proper time. It is this. Okay, so audit trail is an important thing, and there should be internal controls for audit trail, and internal auditor should focus on it, whether trail was properly preserved or not. Guys, again, focus on the documents, focus on things which are marked important, and focus on things which are asked in question bank. Okay, have an overview of everything. You have to explain in your own words. Okay, let's take a small break and we'll continue with the next chapter, chapter number 17. Chapter number 17 has 3 things. Chapter number 17 has 3 things: due diligence, investigation, forensic audit. We'll cover few things. We'll cover few things of due diligence. We'll try to cover the portion of due diligence, and then in the next lecture we'll cover investigation, forensic audit, and finally chapter number 18. Okay, and then we'll be through with this particular revision. For the day, and in the next lecture we'll cover investigation, forensic, and chapter number 18. Okay, quickly, due diligence and audit. In audit, we know that the ultimate objective is to give opinion on financial statement, whether as per applicable framework. If it's a fair presentation framework, it gives true and fair view. When we talk about due diligence is generally done when there is an investment opportunity. When there is an investment opportunity, when one company is trying to invest in a particular business, trying to acquire a particular business, in that whenever there's a business opportunity, there's a potential investment opportunity, one company wants to invest in another company, acquire another company, that time due diligence is done. And in due diligence, financial, non-financial, all the records are seen, whether this investment decision is going to be appropriate or not, what are the different aspects involved, issues and challenges involved, whether it will be a good decision to acquire, and at what price acquisition should be done. So such things are seen in due diligence. So audit is ultimate a different objective altogether, a different objective altogether. It's a periodical thing, and due diligence is a transactional thing. Whenever there's a potential opportunity, that time it is being done. Now, what are the different types of due diligences which happen? Okay, so to remember this, we have made to remember this, just imagine three locations. Location one is a CA office. Location two, location one is a CA office. Location two is a factory, and location three is a factory office. Let's see. So client comes running to us that I want to acquire a particular company. I want to acquire a company, target company. It's a potential investment. It's a good investment. We said, okay, sit. I want to check legal status of this particular company. Is it an active company? What are the active company? What are the litigation cases which are going against this particular company? Let's go and see that. Whether they are having good compliance, what is status of litigation, that is called legal due diligence. So sitting in our office, we did legal due diligence. Then we go to the factory. We go to the factory and see the factory. How big is the factory? How big is the plant? How many machines are there? How many machines are operating? What is the level of utilization? We want to see commercial operational due diligence, whether there are adequate machines, are they in good working conditions, good capacity utilization, how long these machines will be able to work, for how many years, after how many years we need to change it. That's called operational or commercial due diligence. Then we look at the people. We look at the people who are working personal due diligence, whether there are adequate number of people, well skilled people are there, employees are there which are working in organization, they will be ready to work with the new management. That is personal due diligence. Then we see group of people. Okay, then we see group of people. So here we see the overall environment. What if acquisition happens? Will they be very positive with this acquisition? Like whenever disinvestment happens, government company disinvests to private, generally employees are apprehensive. They don't like new management private, because government gives a lot of privileges and benefits which private entities may not give. So we look at that. So there's here environmental due diligence doesn't means pollution and all. It simply means what is the overall environment within the organization, whether they will accept the new person. Let's freeze, guys. Sitting in our office, we did legal due diligence. We saw factory, that is commercial operational due diligence. We saw people, that is labor due diligence. We saw group, whether they are ready to work with us, that's environmental due diligence. Then we went to the factory office. We saw a factory manager sitting there. And on his desk there is a notice from tax. So tax due diligence. Are they registered with all the proper tax departments? Are they regularly paying all the taxes? What are the litigations going on? Whether there is long outstanding dues, we check that. Okay, then the ledger was there in front of that, so we go and see the ledger. Financial due diligence. Are these guys doing proper accounting? What are the level financial due diligence? Proper accounting is being done. Proper accounting is done. They are complete. They are accurate. Reliable information is obtained from the financial. And what is the financial performance overall? Then there was a PC IT due diligence. What kind of information system they are having? Is it latest? Is it good? Is it upgraded? How many departments are connected to this IT systems? What kind of information it gives? Again, is it complete and accurate? So say we are talking about 7 different types of due diligence here. In our office, we went for legal due diligence. When we saw factory, operational commercial due diligence. When we saw employees personal due diligence. When we saw group environmental due diligence. When we come to factory office, we saw notice, that is tax due diligence. We saw ledger, that is financial due diligence. We saw computer, that is IT system due diligence. So there are 7 types of due diligences which happen. You can remember it with the help of this particular flow. Then what is financial due diligence? So chartered accountants are expected to spend a lot of time in financial due diligence. Generally, when the in principle deal is agreed, price is agreed, but then before the deal is executed, uh, acquiring company wants things should be evaluated. That is the time the financial due diligence is done. It's very simple to see all the aspects of the deal, positives and negatives, whether such investment should be done, whether the information provided was reliable, and whether we should go ahead with what are the positives and negatives of the deal. Scope, generally it covers all the aspects, all the financial and other aspects, but if there's a confusion, you should sit with the client and get it clarified. Now here again we have made a flow. Go to managing director. Discuss 2 points. Then go to CFO, discuss 3 points. Then you go to legal head, discuss 1 point. Then you go to HR. It's in sequence. MD is the big person. Discuss 2 points. Go to CFO, discuss 3 points. Go to legal head, discuss 1 point. Go to HR head, discuss one more point. See, it's a conceptual discussion. There is no law. There is no standard on it. Okay, so there was first discussion on all different types of due diligences. Now there is discussion on financial. We go to MD, we discuss 2 things: historical background. We want to understand the background, who are the promoters, who made this, the history of the company, ups and downs, what different types of businesses they have done, what they're doing in the past, their factories, warehouses, everything. So we understand the turning points, their strategies, their important resources, what is the product life cycle, market share. We want to understand the history. We'll be able to understand positives and negatives of this organization, what saved them, what was the reason of growth, what was reason of decline, and so on. Very important. You should always understand the history of the organization. Then we also discuss, we are buying for future projections. We should discuss 5 years projection. Okay, so first we see whether the basic data, first we see the assumptions, most important. What is the assumption with respect to future? What is the total market size? What is the market share? It should not, whether it is realistic, where it's realistic, because that directly affects the valuation, and whether the basic data application calculation were appropriate. So we discuss history. And see guys, write the heading and write 2-3 lines on your own. You cannot write everything. Simply write 2-3 lines. Then you go to CFO for technical matters. We go and understand significant set of accounting policies. What are the important income, expense, assets and liabilities, and what are the accounting policies? Whether these policies as per statutory financial reporting framework, are they appropriate? What are the recent changes? What changes were there? Whether the changes were appropriate? What is the impact? Whether profit is coming only because of these changes? Is it generated? Profit is generated? Okay. How these policies are different from the acquiring company. So focus on the accounting policy. Then review the financial statements. Review the results. Go and see P&L, whether there are extraordinary items which are contributing to profits. Go and see balance sheet, whether assets is overvalued, liabilities are undervalued. So go and take financial statement, talk about P&L, talk about balance sheet. Okay, see trend of past 4-5 years. Okay, trend of past 4-5 years. So you see the financial performance, compare with the past, compare with the budgets, compare with the similar companies. So we talk about financial statement, balance sheet, P&L. We talk about comparison with the past, comparison with the budgets, comparison with the similar companies. So we first see significant accounting policies. With the help of policies, financial statements are prepared. We talk about financial statements. And then from financial statement, cash flow statement is prepared. Okay. Cash flow statement. Uh, Go and see what is the future cash flow statement. Cash flow statement, how much cash they're expected to generate over a period of time. In which month they're going to have surplus, in which month they're going to have shortage. Go and understand them. Okay. Whether they'll be able to recover money and repay all commitments to government, banks, stakeholders, trade payable, and so on. Whether these are going to have strong cash flows. Then you talk to statutory legal head. What are different laws applicable to them, important laws applicable to them, whether they're suspected actual non-compliances, how many litigations are pending. Go and check that. Then talk to human resource, HR head. When was the last time salaries were revised? Whether there any negotiations going on, So understand when was the last time salaries revised, whether where people are expecting revision, we will acquire and all the revision will come to us. So understand the pay packages of the majority, the top profile. Okay, whether there's adequate package, and then whether their retirement plans are properly funded or not. Understand it. So guys, two things with MD, then three things with CFO, one thing with legal head, one thing with HR head. Give heading and explain 2-3 points. That's it, guys. You cannot remember each and everything. Then when we talk about liabilities, again, for the sake of remembrance, we have created a flow. Well, we have to check whether there are hidden liabilities, and overvalued assets, undervalued liabilities and overvalued assets. For liabilities, uh, think about government. When below that, think about shareholders. Below that, finances. Below that, subsidiaries. Below that, employees. Below that, customer. Think about the government. Whether show cause notices are pending against the company, whether litigations are pending, proceedings are pending against the company, whether final assessments are pending for provisional assessment. So look for it, whether there are show cause notices, whether there are proceedings, whether there are final assessments pending, because these can lead to more liabilities. Then with respect to shareholders, whether there is any commitment of buyback, again it can increase the liability. There can be hidden liability because of that. Then try to understand whether all the liabilities, try to understand uh, whether we have given any guarantees to financiers, letter of comfort to financiers. If yes, it can lead to liabilities. It can lead to contingent liabilities and actual liabilities. So these go and check these things, will come to about the hidden liabilities. Then subsidiaries, whether we have sold the business of subsidiaries and whether we have signed an indemnity contract that whatever loss happens because of the business in next 2 years of a subsidiary, we are going to compensate. Liability will be have to book for that also. Then employees, whether there's unrecorded compensations, gratuities, leave encashment provisions. Okay, unrecorded employee related liabilities. Customers, whether there are unrecorded rebates because of product return, discount, late deliveries, whether there are warranty and guarantee obligations, litigations and claims, customer related liabilities are properly covered. Apart from that, environmental liabilities, lease liabilities, content liability, and so on. When we talk about overvalued assets, first asset we talk about is fixed asset. Go and check whether the plant and machinery has become obsolete, impaired, underused, whether any land and building are under litigations, there these wrong capitalization, intangible asset without value. So talk about fixed assets, whether issues with the fixed assets, whether they have become obsolete, whether there's a litigation, cases, it will underused, it will show. Then below fixed away investments, whether investments market value has reduced drastically, we're wearing low rate of return, we need to write off the investment. Go and see whether the inventory is obsolete, slow moving, we have to write it off. Go and see trade receivables, it is old, outstanding. So talk about fixed asset, then talk about investments, inventory, and trade receivables. Guys, as I said, guys, you have to catch the flow. You cannot and write the headings and subheadings and write things in 2-3 lines on your own. Write things in 2-3 lines on your own. Okay. Then work approach for due diligence. It is So when you are going to evaluate a business proposal, an investment proposal, a business, you have to see all the aspects and valuation at the first point. So they are saying, what should be the approach? What should the approach? You should definitely, first thing you can see is, you can approach very simple thing they're talking about. They're talking is, first carefully see the financial statements, annual report, analyze that, then go for on-site analysis. So you should focus on documents also, and you should go for the real on-site analysis also. Then they're talking collaborations. uh, you should working through the due diligence process with acquisition company or investors by defining the key areas. You should closely keep talking to what are the expectations of the acquiring company, and what is target company saying. Work closely with both of them. So expectations, expectation issues, challenges with acquiring company, thinking about that should be covered, and what at the target company saving, even that should be taken care of. And ultimately whether the offer, so the it's not very important, guys. So in due diligence, very important to evaluate all the aspects of the business, proper valuation. What is the approach? Is simple: financial statements, then on-site. You be close to people and see whether the acquisition is good, positive, negatives, and offer is good. Again, not very important. How to conduct due diligence. So they're saying four things. First of all, the mindset should be very open. Don't assume good or bad. Go with the open mind, absorb the information about the industry, about the business, about the organization. Without any bias, try to see what are the good points and negative points. Okay, try to focus on the try to focus on the risky areas. What wrong things can happen? That uh, product may fail, product may fail, uh, legal problems may come up, employee problems may come up. Focus more on that. So mindset should be very open, open to all the things. Don't go with the presumptions, or be open with positive, negative things. Focus on risky things more, trouble points more. So first, the mindset and approach should be good. There should be team. You should have a team which is having very good knowledge about the industry, about such kind of acquisitions, good experience, good qualification, knowledge, like people that what happens in this industry, how businesses run, how deals are made, how which deals become successful, unsuccessful. That team should be there. 360-degree, all the everything should be analyzed, right from the legal aspects. So we have seen all the aspects should be covered, and talk to as many people as you want. Comprehensive analysis, customers, suppliers, business partners, and make a comprehensive report. So how to do it? Have a good mindset and approach, have a good team, do a comprehensive analysis, all the issues, talk to everyone, and then make the final output. What should be the content? That's the last thing for due diligence. What should the content of due diligence report? So give a brief introduction of what kind of assignment we are performing, uh, and then you talk about which is the target company, their background, promoters, brief history, what were the what were things we focused on, what were our objectives, scope, coverage, what things we have covered, which documents we have covered, which locations we have covered, and executive summary. So give an introduction about the assignment. You talk about the target company, its background, its history, um, and a summary of the and a summary what key things we have obtained and what are our suggestions. Then you go in detail operational overview. Shareholding pattern is the most important. Who are controlling this entity? Who are managing this entity? How are the operating results? How are the results? Is it a growing company, declining company? SWOT analysis. So focus on the operations, shareholding pattern, management structure, results, and SWOT. Then go for the financial analysis. Discuss assets. Are they overvalued? Liabilities, are they undervalued? Specifically liability, taxation liabilities. What is the net worth? Is it positive? Is it negative? Is it increasing? Is it decreasing? So that is all will come in financial assessment. You talk about the assets, about the properties, about the charges, liens on the assets, investments, their valuations, receivables. So guys, you're talking about assets, you talk about fixed assets, you talk about investments, you talk about trade receivables, liabilities, net worth. Then you focus on liabilities, litigations, pending, future project, litigations. Then when financial assessment, you talk about the projections also. So guys, it's a mixed bag. And finally, what are the issues and challenges, losses which can be faced, what kind of indemnities we want from the target company, that losses will happen, you bear it. Aspects to be taken care of, what kind of offers and suggestions, whether it is overvalued deal, is a good deal. So broadly, we talk about introduction and background. Then we talk about the operations, how operations are going on. Then financial assessment. We talk about assets, we talk about liabilities, assets and liabilities, and finally recommendations and observations. Guys, we stop here. In the next lecture, we'll finish up this chapter and chapter number 18. Guys, if you like it, do put positive comments about it.